Welcome to Trading Nation. I'm Seema Modi. One of the best performing Dow stocks this year could continue its run. Apple shares up 17% so far this year, and Bank of America betting on more upside. The firm pricing its price target at $3.90 a share on Thursday, a street high for Apple, and on an unexpected 5G upgrade cycle and strong growth in hardware sales. That's what they're seeing in the future for Apple. Joining me to discuss is Bill Baruch of Blue Line Capital and John Petridis of Tocqueville Asset Management. Bill, I first want to take a look at the setup of the stock. Big gain since the March lows. We're starting to see the stock move lower today. Where do you see it headed by end of year?
Well, this is a nice move lower to find as a buying opportunity. Here's the thing first, fundamentally. 5G is the buzzword. And ultimately, I like how Apple has diversified the revenue stream. But first and foremost, this is a company that sells phones. And you're going to have to upgrade to these 5G technology over the next 18 months. It's going to rejuvenate that stream. On a technical basis, though, this chart is broke out above last year's high, a big resistance level at 327. Now that is support. And overall, you also have a rising trend line from the lows in March. And for me, 327, 330 is going to be a huge support level. Now, I also want to point out that it did not get the death cross. And the fact that it rejected, the 50-day moving average rejected crossing below the 200-day moving average in May fueled the upside, as it has done in many of those tech stocks.
John, is the prospect of 5G enough of a reason to keep Apple as a long-term holding in your portfolio?
Well, I think you take a step back and look at all of these mega cap tech names that have really been pulling the market further, and it's hard to see how they as a group don't continue to outperform. With interest rates being low, these companies with this massive amount of cash on their balance sheets have almost been acting like bond surrogates, bond proxies, because you don't have to worry about the liquidity of these mega cap companies. Apple has some issues on its own, right? It's always going to be dependent on the next iPhone cycle, and it's got to figure out if Apple TV Plus is here to stay, and then you should get a benefit from. As we move to a cashless, contactless society because of COVID-19, where you should see an uptick in Apple Pay over time. But, it's hard to see in a low interest rate environment where the economy is in trouble right now and trying to find footing, that companies with massive amounts of cash on their balance sheet shouldn't be a safe haven for investors over time.
Bill and John, good perspective. Thanks for joining us today, and thank you all for watching Trading Nation. I'm Seema Modi, and we'll see you next time.